the best businesses, in my experience, are dictatorships because they can move quickly, and the person at the top with the strategic mindset, they gets the right people around them and they make decisions and they break things and they move fast. That's what Hyperliquid did. That's what the best businesses off chain have done. And I think we're going to see a lot more of that happening at these protocols.
Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed.
Ladies and gentlemen, you have here a rare Rob Heddick with a new haircut. Rob, tell us all about that, please.
Tell us about the new haircut. I'm trying to look good for you. So, and the 3 people who watch the podcast.
It looks, that's true, right? In many ways, it's great that like you assume that no one really cares, and so you're just more spontaneous when it comes to these things. I've there was, to be fair, there is a pretty decent group chat on the Empire. Some good discussions. Rob was in there. Rob and I were fighting in there, just putting up a good fight on prediction markets and continuation.
I was firing away yesterday. I was in the Empire group chat. There's like 1,000 people in there.
I was like, Rob, you're on Telegram? Jeez. I'm kidding. Rob has a fast response rate. But anyways, so you got a haircut. You're in Miami. You're in New York. Undisclosed.
No, I'm in New York. I'm at Miami's done. Miami was a failed experiment for me because I went down there and I was like, oh, I'll be a little bit more like between 2 cities, and maybe I'll get out of the bad weather in New York. And I realized that Miami is where people go when they're retired, and I'm not ready to retire. So there's no business happening in Miami. Like, people are lying to you on Twitter that business is happening in Miami. It's not true.
Interesting.
Other than Palantir, I guess. So
yeah. I mean, I think there's been a couple of firms that like moved offices. I think Citadel obviously made a big push, and then I've heard that it like wasn't working out as much, and like they were looking to relocate because productivity people just didn't adjust well for whatever reason. But anyways,
it's actually hard to be productive down there. Andreessen stood up an office down there. 8 months later, closed it down.
Really?
Like, it's one of those things where you go down there and you have the best intentions. You're like, okay, well, it's going to be great during my time off, but I'm still going to be as productive. I'm still going to, I'm going to live a super healthy life, et cetera. And I just find that even with the best intentions, that just does not seem to happen. And whether it's for, that was true of me personally. And so maybe, people will say, oh, that's a skill issue or something, but it was also true of like all the other people around. Like the other people I knew.
Like you're just like chilling or whatever, or like you just are more inclined to do other things?
More inclined to go for a walk, more inclined to spend a little bit of time outside, more inclined to, I'll maybe it's really nice outside. I'll work on the balcony. I'm definitely not getting as much done on the balcony as I am, sitting in my office. Right. And so, just had to, so I gave up the place in Miami, back in New York. It's 60 degrees and rainy today. I'm locked in. I have no idea I'm going to go outside. I'm going to shut the blinds. I'm going to have no idea what time it is later. I'm just going to be, crunching Claude code all day.
There you go. Yeah, I go back and forth around like, what does it mean to be maximally productive? And I feel like as a team, you need to have workers, you need to have thinkers. But I don't buy the idea that you have to be chained to a desk to be productive. But sometimes you do need to like zoom out and then really intensely focus and just go to the cave and like focus. I can appreciate why Miami doesn't really let you do that.
Well, and I think it makes it, I tend to, I'm a big in-person meeting guy. I think, as you know, I like to meet people in person, and there's just a lot less of that in Miami. It's much harder. You're on Zoom a lot more. And 2, I find that I like to work sort of like differing hours, right? I like to, maybe work really early in the morning. Maybe I work all day on a Sunday. I like to, be really flexible about that. And it's much harder on like a Saturday or Sunday, especially when like everybody's outside, like people are at the beach or whatever. And to be like, no, I'm actually, today is when I want to work because I'm more locked in today or whatever. So I think the reality is like, there is some business getting done down there. Obviously it works for some people. Maybe it's a skill issue, but as a whole, like there's just a lot less going on. And so, my team is here in New York, so I'm back for good. Obviously I'll go back to my normal travel schedule, but I'll reconsider Miami in 10 years.
Yeah. That was my biggest fear when I left San Francisco. Um, when I was still at Verify, I was like, am I gonna be totally disconnected investing in tech by being somewhere else? And I don't know. Like I think probably it's like hard to verify like what would happen in a parallel universe. Obviously COVID happened and working from home became more of a thing. But I think it just comes down to your style of working, honestly. But in
I will
person is
tell
very
you. Yeah, well, and I will tell you this too. I was in San Francisco last week, and for the first time since COVID, I finally feel like it's actually worthwhile for me to spend time in San Francisco. It wasn't really worthwhile for the last few years. It was worthwhile if you were an AI. If you were an AI investor, you're really focused on AI, obviously that's the center of gravity, that's where everybody is. But in crypto, that was not true. Even in broader fintech, that was not true. And all of a sudden, it feels like, some of this fintech, neobank, stablecoin ecosystem stuff is starting to come back to SF. I still think New York is the center of gravity. And if you look at the, by company and the fastest growing companies, both for crypto and for call it broader fintech, New York is still the best place to be. But San Francisco is back to a close second and is accelerating quickly. And so I think San Francisco is back. Real estate prices reflect that because everybody's getting so rich in AI. And I think that San Francisco is a place to be again. I really think if you want to do really, really deep work and you want to be, around and surrounded by the people that are, really building for the next generation or building for the future, the investors or investing for the future, just to learn things, you're better off being in one of those two cities. And those are probably the only two cities in the country right now where that can be true.
yeah. This idea of learning, like positioning, is something that it keeps coming up, which is you're never going to be. I think it was the guy who runs the sovereign wealth fund of Norway, which is one of the largest sovereign wealth funds in the world. Um, per capita, I think it's close to like a couple $100,000, which is incredible. Like um, and he said, look, every year he meets with like some of the largest, most sophisticated investors like in the middle of the woods, and they write down their predictions. He's like, time and time, like every year was so wrong, but for the most part the smartest guys are just positioned really well, which is to your point, like if you want to be in tech, you want to be in in finance, there's really a very few handful of cities where you're just going to be living and breathing it and through osmosis. Because part of the journey for me, like at starting version, was like I really discounted my ability to like start a company because I felt this imposter syndrome of like not being technical. So I said, gosh, I really need to find like a co-founder or something like that. Now I think it's a bit different. Um, but you have to position yourself like to be in the right place to have these spontaneous things. Like Founders Podcast was so great for me because I kept hearing the same story of like Estee Lauder. Like she would have literally shut down her idea. She went to a party, was left in the elevator, met the person that was like the purchasing like department at I think Neiman or Barney's, and had that not happened, probably wouldn't have created this massive empire. So, anyways, you're back in New York. What are we talking about this week? I think there's a couple of things that caught our eye, thanks to Will, our producer here. But what's top of mind for you before we run through the list of things?
I, I think the across thing is probably, it's not the most mass market point, but I actually think has the biggest ripple effects and the biggest implications for what is happening in our space. So I think we should probably start there.
Yeah.
You tell me if you disagree.
Oh, I agree. I saw it yesterday and I tweeted about it. So for context, Across is like a bridge protocol, right? Bridging
Yes.
protocol.
The 35 billion of lifetime volume. It's been one of the biggest. There's, it's very core to a lot of
Mhm. Very
protocols
cool.
and a lot of crypto.
The team I've gotten to know because they were, I think, also the team behind UMA, the Oracle
Yeah.
protocol. I think for a while,
Hard also
Howard,
started. That's right.
Hart, ex Goldman guy, pretty sharp. Has always kind of like innovated. Every conversation I've had with him is like, always thinking about like really is the kind of person that will challenge like pretty much everything from first principles. And it's interesting here. So what they're doing, just to get some context here, maybe I'll share my screen just for folks to see it while we're at it. So this was, I think, was Yogita from the block. So Across Protocol wants to become a private company. Um, they posted a temperature check proposal exploring the move from a DAO to the US to a USC corp where ACX holders, token holders, would exchange tokens for equity. If approved by the community, holders could either exchange token for equity at a 1-to-1 ratio or redeem tokens for a fixed price at a 25% premium to the 1 month average price. Interestingly, the token is up 33% since the proposal. Um,
Well, so I mean, the pricing is interesting that because they, uh, this premium to the trailing price was approximately, I think, like 44 cents or so, is what they told you they'd buy you out. And it traded up yesterday, like all the way to like 63 cents. I think it's back down now to about 50 cents. But what does that actually imply to you? And we should talk more broadly about the implications here. But that probably implies to you that the market believes that a cross is more valuable as an equity business than than the token is. And so you would pay a premium here than what they value the token at to get access to the equity in the future.
yeah. No, I'm sorry. I was looking at this chart, but this is all time. Yeah, the token was up massively yesterday. It's down a lot from an all-time high. It's sitting at 50 million fully diluted, 35 circulating market cap. But yeah, that is, I think, the that is a soundbite here, which is the market very clearly tells you that it'd much rather be an equity play. I wonder what the mechanics are. Like, you probably, in order to convert, need to satisfy some KYC criteria and just go through general like standards, right? Like, presumably, there's a subset of people that may not want to do that, may or whatever. But you probably need to comply with some KYC stuff, right? Or you most definitely need to do that.
Yeah, so what they agreed to do was that, I forget what the actual cutoff was, but for some version of the people holding the token, they would get converted directly onto the cap table. And then for, people below a certain parameter or a certain like dollar amount, they would get put into an SPV that would be on the cap table. That would have so you'd have some sort of like equity. You'd have equity exposure, of course, but you probably don't have the same rights. Somebody is kind of fulfilling those rights on your behalf. But yeah, either way, you're going to have to KYC, of course, whether in the SPV or whether you're in the equity of the company.
Yeah,
Um,
I'm
and
reading
so
the. Good.
but they also have to go through a DAO vote, by the way. So, the DAO vote hasn't happened yet. I think it happens in 2 weeks, and it'll come up to I think Hart posted publicly that if it passes by basically like one vote, they will do this. Like, it's very clear that they want to do this. They talked a lot about, I think, quite interestingly, what this meant for their ability to just like accrue value, right? Because they believe that there's just an ability for them to do more like actual deal making and to go businesses and to operate in a way that like allows them to accrue revenue even better than if they are, a DAO. So it's literally not just that, okay, well, we think we can operate more efficiently. The token's not doing well. We're not able to figure out how to access or give value back to the token holders. But also, we think we will operate better. We will do more deals. We will create more revenue if we don't have that public token out there. The token is a hindrance on our business.
No, that's interesting. So I'll quote: as institutional demand for a cross infrastructure has grown, the current DAO structure has become a bottleneck, the team said. Enterprise partners need enforceable contracts. Revenue agreements need a legal counterparty. The kind of deals that would drive the next phase of growth require a structure that a DAO today simply cannot provide. Pretty interesting, right? I mean, I think they're this in context of why there's like a Wyoming DAO, right? Structure
There's like a DAO structure that Andreessen's been pushing, yeah.
that's been pushing. I saw this firsthand, like Pleaser DAO, which is this like art collective, and I could tell you, it's just I think a pretty sober reality of the state of DAOs. And the other element here, which is interesting, is the company itself will house all the IP. To your point around like this disconnect that we've talked at length about here, right? We just saw this with Aave. A lot of deep in projects have this. Like there's different entities, and there's the disconnect in value accrual, right? And yeah, I think to my knowledge, this is the first crypto project that has done this, right? That collapsed everything, and the idea what this will look like in you buy people out that don't want to convert into equity at a premium. People that like large holders like Paradigm, Multicoin, Bain, some of the investors. I think they've raised 50 million in total. Would you know presumably already have they're already equity holders, but their tokens would
So it
get
depends. I think the paradigm round happened after the token was already live. So the
okay.
paradigm round. So what typically happens in VC in these rounds? This isn't always true, but I think the most common thing has been that if you do it before the token's live, you buy both the equity and a warrant for a potential future token. If you do it after the token is already live, you might have just bought tokens from the treasury, and so it's unclear to me if those people who are in the public round that paradigm led bought equity as well. But I'm sure that Hart discussed this with them and that they were supportive of this as well, right? And I will tell you that I believe this is the first one of these happening in this way. There might be another. I'm vaguely recalling, but I talked to another protocol today, which is a brand name, where the token hasn't performed, but it hasn't traded at the fundamental, or it hasn't traded as well fundamentally as you might think. Who's doing the same thing, and they've been working on it for a little bit as well. And I expect that we will see quite a few of these good protocols where the business of that they are actually effectuating is doing well, and the token hasn't performed. That this will happen. I bet you we see a dozen of these.
Uh, you read my mind. That was my first reaction. I saw it yesterday. I said tokens are now going to convert to equity, then go back to maybe tokenized equity.
Well, and that was the
And
conversation I had with this other protocol was, yeah, we wanna convert the token back to equity, and then if something happens with market structure, or maybe we do, something like, what Superstate is doing, where it's like a lighter regulatory regime, and, it's, in terms of how they do that public issuance, but natively on chain. We wanna be on chain, but we want it to be equity. We don't want the drag of this governance token. We don't want the drag of a DAO. It doesn't allow us to run the business the way we want to, and it doesn't allow us to return capital or value to token holders or shareholders over time. And we just think it's more clean to be able to do this, and this is the best way to effectuate that. And so this is going to be one of the things that we have learned over the last couple of years is this Aave conversation over the last few weeks or last few months. Aave is probably the only DAO that's figured out how to make this work, and it's still very, frankly, it's very, what's the right word? It still doesn't work very well. They're probably the best ones that have made it work with very contentious, revenue. They go into the DAO with things that actually matter to the bottom line of the business, and they have the DAO really effectuating or really acting like an independent entity relative to the labs and corp. That most of these don't do that. And then you look at, and they're still trying to figure out, how to run the business appropriately. Then you look at like what a Hyperliquid has done, which we've seen some of feigning of like decentralization and independent decision making happening there, but it's very clear that's not what's actually happening there. And they've been the most successful protocol in crypto. And that's not necessarily why they've been the most successful protocol in crypto, but it is part of the story, right? Because it is the best businesses, in my experience, are dictatorships because they can move quickly, and the person at the top with the strategic mindset, they gets the right people around them, and they make decisions, and they break things, and they move fast. That's what Hyperliquid did. That's what the best businesses off chain have done, and I think we're going to see a lot more of that happening at these protocols.
yeah, I definitely agree. I mean, I think the market doesn't like this dual structure. You could look at like a protocol like Helium that I've been spending a lot of time there, and to me, it's always been a head scratcher. But again, I don't think the market's dumb. Like the community does not like it understands that there's a disconnect. And so what does this mean for like because in many ways, like what does a future state of tokens look like? And so I've talked to a lot of founders that before like a couple of years ago, you would have said a token is great. Like, let's just get it out. We're gonna do like it's a go-to-market strategy. Uniswap, in my mind, probably would have stayed without having a token for a really long time had Sushi not like try to do a vampire attack. For people that are new, it's a classic like DeFi moment. And I think after that moment, a lot of protocols you would have heard them say, we need to have a token to be competitive. We need to have a token to subsidize fees to sustain our business model. Tokens, I think, not too dissimilar from stock, they help you. What tokens probably better than stock is, let's effectively give our customers equity skin in the game, and hopefully that helps with the retention. And I think like there is some proof into that. Like Hyperliquid, for example, uses the token, right, to subsidize like the fees, right? And it has been a huge wealth creation for the active community. So it makes sense. Like tokens serve as a way to acquire customers, distribution, capture mind share. But for every Hyperliquid, there's 99% other examples that just tokens. And I've heard it from a lot of founders. It's like, dude, if I could go back, I would not have launched the token. It was distracting. I then had to, constantly like respond to the community, manage a Discord. Um, you look at the time, like you look at traditional venture companies are staying private longer. There's a benefit of staying private, and there's a lot of liquidity in the private markets too. Now, there's reasons why you want to go public. Um, but I do think that this perhaps is a prediction here. I think we'll see less and less teams issue a token or rush out of the gate to issue a token, and maybe wait for the regulatory environment to clear up, or just build a good product, accrue value in the equity, and then maybe either. I mean, we've seen a lot of acquisitions, right? Coinbase acquired Tensor Team; they acquired the equity, not the token. And I've had a couple other portfolio companies.
Circle and Axelar, same thing.
Exactly. So yeah, it's a very interesting sign of the times, no doubt, right? I think crypto founders are appreciating. Hey, we actually built a nice product here. We could maybe go public, or we could maybe get acquired, and a token just introduces a lot of brain damage right now, because the reality is a regulatory environment, as favorable as this administration is still not clear for tokens, and you have to still dance around that, right?
Yeah, but I will say the other side of that, right, is that I mean, look at some of these things like Ondo, right? Ondo would obviously not have ever been valued at the value that it was at if it was an equity business, because if you were looking at a fundamental investor, we're looking at the revenue that they make, right? That wouldn't have been given that valuation. And so a lot of people, investors, team members, and some of the, I'm sure, early, traders got, made a lot of money on that because of that, right? You look at some of these other protocols, to your point, could you have bootstrapped in Athena in the way that you had without a token, right? And even Hyperliquid, right, which is making as much money as it is, without the success of that airdrop, would it have gained as much mindshare and as many users as it has? I don't think I'm gonna get tweeted at here because everyone's gonna be like, "Oh, it's such a better product," and it is a very good product. And so I'm not trying to dispute that. And Jeff has done a tremendous job, but not clear to me that it would have done as well as quickly as it had without the success of that airdrop and without accumulating or allowing people to accumulate wealth on the back of using that. And I think we've seen that the exchange tokens are a little bit different because the exchanges have a reason. There's a real utility for their tokens, but that's not
Yeah.
true for all protocol.
Yeah. I mean, let's double click on Ondo, or just Ondo like product. Like, I'm just called a spade a spade. A lot of the venture investing was, hey, I can have the venture like asymmetry with short duration. Because if the team's going to launch a token within a year, and I could unlock in 6 months after that, or a year, the market tends to value these things at X. And so I can probably take my principal out and then have like free optionality on the rest. And, we've sort of assumed that the market doesn't treat these things on a fundamental basis. So we'll just kind of issue and help them with KOL rounds and go to market and exchange listings, and focus on like certain geographies that, you have to have a good mind share. And if you do that well, we're likely not going to lose money on this deal. And I think a lot of I'm not saying you guys specifically, but I think there's a big part of the crypto venture universe that kind of operates like that, or historically operated like that. I think the returns, like there's so many protocols that are not only trading below their last round, they're trading below their first round valuation, and like they're just going to close to zero. Like I'm talking like sub 10 million, sub 5 million, fully diluted market cap, and there's just no willingness to bid that protocol. Now Ondo is interesting because it's still valued at like 2 billion circulating, two and a half fully diluted. So I'm actually pretty interested in. I don't know if you guys played in Ondo or not, but like on to your point, on a fundamental basis, like how do you justify a $2.5 billion valuation for Ondo?
I put my old firm, the hedge fund that I was at in 21, Golden Tree, we put a check into Ondo when it was such a structured products business. And so people might remember the original Ondo was just basically about how do I tranche risk in DeFi. And so had some exposure to it through that. But the Dragonfly did not play. And I think, listen, I think they were obviously one of the first to, some of the like RWA narrative, and they've done, a good job in a lot of different ways. But very clearly, this is a low revenue business, I'm sure, and it's not something that would be valued like this in like a public market in the equity. Um, and I think this also belies a little bit of the concerns that a lot of the retail buyers of tokens have, which is like we don't actually know how much of this float is public, and how many people are actually holding this, how much sell pressure there is, and so even though it should be transparent because it should be on chain and there should be this mechanism for disclosure, it doesn't. In a lot of cases, I think on the application side, it seems like a bit of a facade, and that's what part of what people have been concerned about. I think it's also important to say that everybody talks about crypto as like a monolith, or all of these tokens are a monolith, but the L1s, the L2s, the infrastructure layer is very, very different than the application layer. For one, what purpose does the token serve, and how should they serve that purpose, and why do you want to hold them? But two, in terms of like the games that people play or the ways to return value back to the holders of that. And so, I don't expect to see, an L1 go private, right? I do expect to see a lot of DeFi applications do that over time,
Yeah.
right?
I was thinking about like Aave here, which is like I get why Aave wouldn't want to go private. Like this, I think it was the episode with Tushar. He made up a good point, which is like if you want to truly like, there is small but interesting probability that Aave like becomes this like money market layer for the world effectively. And if you're operating as a permissionless protocol, you're essentially like there is this regulatory arbitrage. Like you can basically operate cross jurisdictions, and it's just code. Like you just there's fees trickling into token holders, and there's like you know from a monopolistic standpoint, like you can become a monopoly, and like it's harder to clamp down on that. Like it is effectively a protocol, right? And so you wouldn't want to privatize it that way. um so I thought that was an interesting take that he had, which we were discussing like, hey, would you rather own Aave versus like a neobank, because obviously Aave is trying to push into that direction. But I could see why you wouldn't want to privatize, or you wouldn't want to like just not have a token for something like Aave.
Well, the incentives are such, in my mind, that the things that have traded well, your Ondo, your Aave, your Uniswap, like your, Hyperliquid, uh, obviously there's a wide range of valuations between all of those, but for the people who have traded well, and, the founders, the investors, some of the retail investors have all made a lot of money, and the token continues to hold up with these multi-billion dollar valuations. For those guys, the token is probably worth the annoyance, right? And there's the point that you just made, which is like, okay, well, it's like easier to expand my TAM and to go international and be permissionless kind of tech layer for finance globally. But there's also just like a lot. There are things you can do with tokens that are interesting. The group that is going to, I think, see the going private en masse are these protocols that you and I know are actually doing pretty well in terms of getting adoption and people using them, but the tokens are trading at sub $300 million or sub $400 million. And you just haven't seen the tokens trade at all with, fundamental growth. And for all of those guys, I would bet that every single one of them is thinking about this right now, and that a lot of them end up doing this.
Yeah. Ondo, just to double click, and I'm looking at a DeFi Llama dashboard. Blockworks, sorry, you didn't have one. 50 million of annualized fees. They've had some growth, but at that level, you're like 50 times, revenue or fees, I guess. So obviously, from a fundamental
But
standpoint,
also, what is that? What are they actually? They're doing a lot of sharing, right? And so like the
yeah,
fees are different than what you would actually see as like net revenue, right?
yeah, the take rate, I think this is aggregate fees, not like net, but
Oh,
yeah,
left hand.
it's yeah. Anyways, any suspects without leaking too much alpha, but like of which protocols you think, like, where is this actually, like, name one protocol that this makes a lot of sense.
Yeah, I mean,
I can tell you one.
I'm not gonna name protocols in my seat, but what I will say is like if you go on DeFi Llama and you look at or CoinGecko or CoinMarketCap or any of these guys, and you go to the DeFi page and you sort by market cap, that a lot, if you go and you start looking at people that have sub 300 sub $200 million market cap who are also protocols that you think are growing and doing well and like serving customers, I would bet every single one of those guys are thinking through this right now.
Yeah.
I mean, how on earth? And I don't. I know nothing here, and so I'm not saying this will happen or and I whatever. But like some of these things, like a Jito, right, is a core piece of infrastructure in Solana, and it traded at a multi-billion-dollar valuation for a long time. And it's a 200 and I think it's got 123 million in market cap now, right? And so I literally know nothing. I'm not trying to imply anything, but some of these things, like the teams are still very clearly working very hard at building something very important for their ecosystems and for customers. And maybe that'll just be easier if they don't have a token.
Yeah. Yeah. I mean, token's down 80, almost 90%. It's at 275 million.
I mean, Camino's been growing a lot, right? And it's 78 million.
Camino's trading at like a fraction of the multiple of Aave. Obviously, it has way less TVL, but it's a dominant player in the Solana ecosystem. So if I'm an investor there, and again, discuss it with the Tushar. They're all also investors in Camino, and there's a very different multiple there for Camino. I think Camino's trading like quite literally half the multiple of what Aave is. Yeah, I think I remember, like, whenever I meet founders, I ask them like, why do you need a token? And sometimes I get very compelling answers to that. I think the reasons why you want a token for an L1 makes sense. But for everything else that doesn't require as much coordination, it starts to look contentious, to be honest. Like okay, Pump.fund. It just crossed $1 billion in revenue. Huge milestone. And again, I'm an investor there. They ended up raising around I know why, sort of the rationale to raise another round is because they want to really invest in social, and they want to they're competing against becoming like a hybrid of Binance and TikTok, and they feel like they want to go hard at that, and that takes capital. But the token's it's just at that point noise. Like, why have a token? Like, clearly you created a launch pad. People are going to use it. In many ways, you wonder, like, did the token do more harm than good? I don't know. I don't know what the answer to that is, but I could tell you like the brain damage of having a token, and they're doing buybacks and whatnot. But it's like, is this the right structure? Because there's a whole other set of businesses in crypto that are widely profitable, like Bird Eye. Bird Eye doesn't have a token, as far as I know, right?
I don't think so. No.
I could tell you they're printing.
Dex Screener, same thing.
Dex Screener, I've heard, is like just printing.
They print to make a lot of money. Yeah.
And I've looked at some of these to, like, I know it's not our mandate, but I could probably see someone like Arthur Hayes. It has that buyout fund for crypto businesses. Like, A CoinGecko doesn't have a token, right? So I would really push back on this idea that I think I'm glad to see the market finally realize, like, hey, there's only very specific reasons why you want to have a token. Think twice before you launch it. Really, maybe go talk to other founders. And this conversation is kind of irrelevant. Like in a state where prices were at all-time high, guarantee you we wouldn't be having this conversation, right? It's like irrelevant. 6 months, be like, God, yeah, we
But
were
also the
just,
math wouldn't work, right? Like you wouldn't have the capital to go buy out these people if they wanted to.
yeah, yeah. There were some investments that I've made where there's a pretty, especially like infrastructure as a service, um, where a big part of like the cap table was sort of mixed of like traditional VCs, and a lot of them were like, "Hey, don't launch a token. Like, just continue to capture value. Like, you can run this as like a software as a service, like a infrastructure as a service business. Forget it." And in many ways, I think it's the right answer.
Yeah, we always tell everyone who comes to us, we tell them like, listen, like, um, you know, if you're going to launch a token, there needs to be a reason for it, and you need to be able to clearly articulate what it's going to do and why. Right? I think that's the world we're in right now. I do think there's a risk of us getting or reading too much into this and swinging too far one the other way. Like there are a lot of reasons for tokens to exist and for tokens to play a role in the future value accrual and for these businesses. And I think there will continue to see innovation at the token economic level. So I don't want this to be taken as if, okay, well, like nobody should launch a token and tokens are stupid and it should all just be equity. But I do think it just underpins how challenged the token market is right now, how the investors are viewing the token market, and how much change we need to see, and how much thought people need to put into launching a token if they're going to be honest.
Yeah.
ZKsync is the bank stack of Ethereum. ZKsync's Providium is the only Ethereum secured platform that is purpose-built for institutions that demand privacy, compliance, and full control of their data. ZKsync enables financial institutions to thrive in the digital assets economy by launching and monetizing their own chains, tokenize real-world assets, build programmable markets, and settle cross-border in real time. Visit ZKsync.io to learn more about the Bank Stack of Ethereum and book a demo. As always, investments in blockchain technology involve risk, terms, and conditions apply. The Blockworks Digital Asset Summit is back in New York, March 24th through 26th. We'll have top speakers from leading asset managers, financial institutions, DeFi protocols, crypto companies, and policymakers all under one roof. Think BlackRock, Coinbase, Robinhood, and more. Follow the link in today's show notes to buy tickets and make sure to use code EMPIRE200 for $200 off at checkout.
All right. At risk of overthinking it, let's talk about Mastercard. They launched this recently. This Mastercard Crypto Partner Program, global initiative. It brings together more than 85 crypto native companies, payment providers, financial institutions. A lot of familiar names here. I haven't looked too much into this, but what's the deal here?
Yeah, I mean, it's there's a lot of excitement about it yesterday. I think really what they're doing here is they're just saying, hey, listen, like we're going to try to make coordination across companies that want to build on the Mastercard network easier. So it was a little bit light on details in some sense, because there wasn't, hey, like, we're launching this product or that product. It was really, I think the quote said something like, hey, we're creating a forum for meaningful dialogue and collaboration. They really want to just help create and provide access to their team to help create, new interesting products and services that are on the Mastercard network. That's great. And I'm very excited for that. There's been I know the head of crypto there, the head of digital assets there, pretty well. He's been there for a number of different years. They've been focused on launching different types of products in this space for a while. So it's not necessarily new. They've also been investing in, but they have this thing called Crypto Start Path, where they invest in kind of early stage companies. So it's not new that they're focused on the space, but it does seem that they're trying to maybe coordinate more with a broad set of, innovators and service providers and companies to build on them. And it makes sense because Visa is very far out in front of where they are in terms of just the interactivity with the space. Visa is doing over 6 billion of annualized direct stablecoin settlement on the network now. And if you look at basically all the stablecoin card ecosystem or market, almost all of it is in Visa today. And Visa has been, I think, further along in thinking through what future products look like. And so they need to catch up. So I'm interested to see what comes out of this, but at its core, this announcement itself wasn't particularly helpful.
I'm going to go there, but would you rather own Visa or Mastercard? And to lay the context, Visa, $650 billion business, Mastercard, 500 billion. Visa trades kind of 24 to 33 times forward earnings. Mastercard, bit of a discount. Visa has better margins, marginally. I think Visa has 67, 68% operating margins. Mastercard has a bit lower. I've actually only have one Mastercard, and that's tied to the business because that's our banking provider has that. But I think certainly from a crypto standpoint, the team of Visa has been, to your point, way far ahead here. But what does this mean for Mastercard? Is this just a nice announcement, or what does this actually mean for their business model? What could this look like in a year, or a year might be too early, but 3 to 5 years from now? What is it? Does this even show up in the P&L?
Well, I think it has to, right? So, at the end of the year, Visa was doing about 3 billion of annualized stablecoin settlement. I think in the first 2 months that's doubled. I expect there to be and I've said this a bunch. I don't think traditional networks, a lot of the traditional rails are going to get competed away or get brought out of the value ecosystem from stablecoins or AI or agentic commerce or anything like that. I think a lot of this obsession around P2P stablecoin transactions doesn't really make a lot of sense within the realm of the way that merchants and businesses and banks interact with the payment system. But what I do think is going to happen is that we're going to see a significant amount, if not someday all of the settlement layer exist on stablecoins and tokenized asset rails, right? And so what does that mean? That means Visa is growing very quickly. The fastest part of Visa, the fastest part that's growing in Visa right now is two things. It's their services business, but then on the transaction side, it's what they call Visa Direct, which is its non-bank transaction business, right? So you're outside of the traditional banking network, outside of the traditional Visa network. The fastest growing transaction business is Visa Direct. Mastercard has Send, which is the same product. And I actually think Mastercard Send is a little bit bigger than Visa Direct today. And I think when you look at that, you look at the continued, I think, emergence away, or the continued just excitement about these alternative payment methods, these alternative rails, even outside of stablecoins. The future will probably look like a thing, or probably look like a place where, unless you do business with a GSIB, everyone else is transacting off a traditional bank network and on something net new. And that net new thing, in my mind, will be stablecoins, right? But that doesn't mean that Visa or Mastercard, who play significant roles in auth and settlement and fraud and detection, are going to go away. I think they're going to continue to grow tremendously. I just think that they're going to start putting a lot of their infrastructure on stablecoins, and the banks, the issuer banks and the acquiring banks, are actually at the most at risk at getting cut out of that payment flow.
Yeah. Is it fair to say Visa's been Visa captured? I mean, you guys are invested in Rain. They capture most of the on-chain crypto card volume. That's an area where they've just dominated.
The vast majority, yeah.
About 90% of it is from what I'm seeing. Whereas Mastercard, they've sort of focused on more in the infrastructure layer, like programmable money, agentic commerce. I don't know what that actually means in practice, and why Visa couldn't just do the same. But
I mean, Visa has an agentic tokenized identity thing as well. Yeah.
Going back to that a couple of months ago, some of these acquisitions didn't go through, right? I think Mastercard was in the running to acquire, was it BVNK?
They made a run at both BVNK and Zero Hash, but neither BVNK or Zero Hash have actually transacted, as far as I know at this point.
Is that on their behalf, or they just are buyers just not really buying the valuation?
I think there's been a I'm not in these conversations, so I don't. This is me speculating. I don't know anything, but I understand because if you remember, then
You
the rumor,
speculating? Never.
then I mean, it's part of the job. But if you remember, then the news that came out was that BVNK and Coinbase were likely to come together, and then that didn't seem to have happened either. And I think there's some discussion around valuation of these things. I think there's some discussion around, the actual customers that are doing most of the revenue at these companies today, which are like all history. Like if you look at the history of payments, companies that have built big businesses of payments usually started with higher risk customers. And that's either, okay, well, I started with like long tail startups and then I grew with the startups. That's the Stripe story, right? Stripe is the company that Shopify made, right? And now, of course, now Stripe is a behemoth and does everything else well. Or, it's people who have done or served, gambling or, really like far tail emerging markets or porn or things like that. And, eventually grown into and be able to shut off, some of these, call it more high risk industries. And so I think when people get under the hood of some of these companies, we're seeing the market shift. We're seeing, the biggest tech companies and, the biggest Fortune 500s come and say, hey, I want to do stable coins. And like this market, and I still strongly believe that a lot of our payment systems are going on to stablecoin rails. But I think when you look at the current set of where most of the revenue is coming from for the service providers, it is more high risk for a lot of people. Not everyone, but for a lot of people. And because of that, it makes it hard for, I think, some of these, public companies, especially, to acquire that revenue and see cross-sell opportunities, to see synergy opportunities, versus decide to maybe just build in-house specifically for their current set of customers who are maybe not as high risk, and they don't have to pay, the same type of multiple for that.
Yeah. No, absolutely. So I think we can move on from this. It was just an interesting announcement. And I guess the other element that I want to touch on is Ripple doing the tender offer, I guess, for a share buyback at a $50 billion valuation. This comes after doing, I believe they sold equity last year at a similar valuation, and it was, I guess they have like a bunch of tokens on the balance sheet. It was like 40, right? 45 or something. And the math there is, I think, roughly like they have a ton of XRP tokens in the balance sheet at the current valuation. Then it was like a pretty steep discount. Uh yeah, it's interesting. I guess they're buying out former employees, investors. Um, why not use that capital to go buy something else?
Well, so they've had a buyback program for a while for the equity holders. I think they run it twice a year, and they've been doing this for years. And there's some limitation on how much you can sell of your holdings. It's only up to like a certain amount, so it would take you a while to sell all of your holdings. They, to your point, that $50 billion valuation, I think by my math, and it's impossible to know exactly how much XRP they still have, but by my math, they have something like 75, 80 million, a billion, sorry, of XRP on balance sheet. And so, it's a discount to that. And I think if you look at all the acquisitions they've made, so they have RLUSD, obviously. RLUSD probably does 50-ish million of revenue. Right now, it's like 1.3, 1.4 billion outstanding. They do a lot of incentivizing the RLUSD pool, so I'm sure net or gross profit is below that. But then they acquired Hidden Road, which I was intimately familiar with for investors in, and G Treasury, which was a big 40-year-old treasury management business, and they acquired a few other things, Rail and a few others. I think they probably do, call it 400 million of revenue, right? And so if the whole business is 400 million of consolidated revenue, what do you think that's worth? It's a prime broker, a treasury management platform, SaaS platform, payments orchestrator, and a custodian. What do you think that's worth on a blended multiple basis? And then the rest is XRP value, right, on balance sheet. And they've been using that XRP, I think, for they sell it occasionally. They have a program where they can go sell it into the market. So they've been using it for operating. I'm sure some of that cash has been used for for acquisitions, and so they're clearly growing the business with some of that XRP. But if they were to need to like liquidate Ripple today, what would they actually be able to liquidate that $80 billion of XRP worth? It's definitely below
Not
50
80,
billion. So,
much below.
yeah.
Yeah, that's always tricky. I mean, obviously, for every Ripple, there's another failed experiment, like Axie Infinity, for instance. Obviously, did like a treasury diversification deal, and same story, right? They had a bunch of AXS on the balance sheet, like token on the balance sheet, and that clearly just didn't. Now Ripple's kind of defied gravity but and it's interesting. Like to your point, if they're actually making 500 million of revenue, what's like their operating margin here? Like 30%, 40, maybe higher.
Yeah, I don't know. I mean, I know they're reinvesting, right? So obviously the stablecoin business, if that's 50 million, that's typically a high margin business, but they're giving away a lot of incentives. Hidden Road, they should be, at least when I was still going to board meetings there and whatnot, like I would have expected them to have last year been profitable. So EBITDA positive. And that was a very good business. And I'm sure that's doing incredibly well still. G Treasury, I don't know if G Treasury was profitable or not. Old business, I think they were profitable. And so, how much, net profit or EBITDA or is that 400 million of revenue doing? I don't know. It's not, I'm sure the margins aren't super high, but,
Let's
call
be
it,
generous, like maybe 200 million, like
yeah,
like
probably less, to be honest. Yeah.
less, but like assume 200 million of profit, like operating, like this thing is now trading at, yeah. What's
Well,
that?
how do you think about it, right? It's like it's you can do the same math on MicroStrategy, right? It's a pot of Bitcoin, and then it's got an operating business that does, I think, like 300 million of revenue, right? And so, what is the operating business worth relative to the Bitcoin? I think it's pretty clear that the value or the way people are thinking about it more is more like a holding co. So,
Would you buy it?
what do I
Would
Ripple?
you have done, would you buy, well, would you rather own XRP or get this wrapper as the operating business that has now subsidiaries that you're familiar with at 40, say you got the deal of Brevin and Fortress, like 40 billion at the time. I think like the tokens were worth 90 billion on the balance sheet. So, that was a pretty interesting discount with optionality that they're going to continue to grow the prime broker and a couple other businesses. But like, would you have taken that deal of 40 billion?
Um, it's not our mandate. It's a little too late
PA,
stage. Yeah. I listen, we don't invest in stuff like that. I think there's also something to be said here, right? Which is like Fortress and Brevin Howard did that deal. How do they invest? They're probably not investing naked long in some equity, right? And so
This is very much
there's probably
that. These are the same guys that are doing that.
so there's probably some structure around that makes sense for them. That was not what we do, which is that we are long term, long only investors, right? And so I think it's tough today to buy. I mean, and you see how like if Ripple went public today, do you think it would trade like an operating company, or do you think it would trade like a DAT?
Yeah,
Because the
yeah,
DATs are trading on average at like a 20 to 30% discount to NAV right now.
yeah. Some worse, but yeah, yeah. Is there now maybe transitioning a little bit into that? Is there a bright light into that universe?
I think the DATs will do fine if the market does well, right? So, if we get into a bull market and Bitcoin goes from 70K to 150K over the next 9 months, like the DATs will do well again because they'll be able to do this financial engineering, and some of them will be able to, find interesting ways to create some value. Not all of them will do well, but kind of the key ones, the larger ones, will do okay,
Yeah,
and we'll figure out how to maximize value. So.
yeah. I think it's important to make sure that a lot of the topics that we cover in a bear market are not buried in a bull market, because you're bound to make those same mistakes if you don't actually like go listen to some of the things that you were scrutinizing in a bear market. That's why keeping a journal, like a trade journal or just ideas, right? Because this idea of converting tokens to equity like should not be lost. There are some businesses that, regardless of I appreciate that if the token's at an all-time high, this is not necessarily viable. But before you go and launch a token, just think critically, right? Um, but But yeah, a lot of I think like there's other stuff on the margin that I don't think in the interest of time, like I got to drop in a minute, and I do want to go to content of the week. But I don't know if there's anything else you want to cover before we kind of round it out.
No, I mean, maybe we can spend 2 minutes just on the Kraken Fedwire stuff, which I think is interesting. I don't know if we talked about that much last week, but I do think we're in a very interesting time right now for what is happening to banks and what is happening to the banking sector in the US. We've talked about this a bunch over time around, Genius Act that essentially allows for narrow banks and, Kraken getting their Federal Reserve master account, which gives it, the ability to settle payments directly with the Fed and to avoid using intermediary banks and to um, basically, be able to really innovate at the payment layer of what they're trying to do with a few of their products outside of the traditional sponsor banking system. I think is actually quite interesting, and I think we're going to see a lot more of that. And so, especially now that with the OCC charter and application seems a lot more open for a lot of companies. Aribor and being one of them, but we've even seen like non-crypto companies, Nubank and Revolut and others start to look at this. I think we'll see a lot of innovation at the payment layer in where banks have typically been played that, just like what we talked about earlier today with Visa and MasterCard, will take a lot of the correspondent banking system uh, out of the settlement flow. And I think we're going to see a lot more of that move on to these more digitally native, like stablecoin rails. So I think that's important. And congratulations to Dave and Arjun and team. And I think that's the first of a few, but it's going to be super interesting to see what happens there.
Yeah. Yeah, for sure. Kept thinking about that $20 billion round that they did last year. But yeah, pretty interesting. I think it's who else do you think can how like thinking about like Kraken versus Coinbase? Um, does how do you think about what Kraken can offer versus Coinbase historically had been able to offer, given this new access that they've gained?
Yeah. Listen, Coinbase has been, I think it's very clear that since Arjun came on to Kraken, their product velocity and their I think intuition about where the market is going and what customers want has been better than Coinbase's. There for before Origin for many years, Coinbase was operating at a higher level, and I think that flipped post Origin coming on. He's done a tremendous job. I think they have been, they announced their deal with I think it was Nasdaq earlier this week as well to allow for Nasdaq to be kind of the registry for their tokenized stock business. They bought XTOX, and then for that to then go and offer XTOX permissions, which they already do, but to work more directly with Nasdaq to on the registry side and to try to get do more distribution to some of the Nasdaq customers. So I think it's really interesting what's going to happen there. That honestly has to scare Coinbase shitless, to be honest, because between that and what happened with OKX and NYSE, Coinbase is kind of left out of these big partnerships because they've always said that, hey, listen, we're going to go compete with those guys directly. And so I think when you take all of that into account, Coinbase has tried to do a lot of things. Base has been very successful, but a lot of the other things have not been. And so that in that payments business, they're still trying to figure it out. Coinbase Commerce is a good product, but they kind of seem to stop focusing on it as much and they've started focusing on other things. And so I think they're in for I think they need to take a big swing, if I'm being honest. Like I really think that Coinbase needs to, they did a bunch of, call it small or mid-size acquisitions last year. It's really hard to integrate all of those. It's really hard to do that transition. And I'm not quite sure that any of them have done particularly well to this point, based on the data that I'm looking at. Some of that might just be the market. And so they need to figure out what is the big swing that they're going to take for the future.
Yeah. Yeah, I agree with you. I mean, I think like if you would rather own Robinhood or Coinbase, I'd take Robinhood. If you'd rather own Coinbase or Kraken, I'd take Kraken. Would you rather own Robinhood or Kraken? I'd still probably take Robinhood just because it behaves better. and it just has a more interesting customer acquisition funnel and product offering. But a lot of it is just price dependent. I mean, Robin 65 billion, it's come 50% off its high. But they're doing some they again product like founder led, and they just move to your point around product development. It's just really interesting what they're doing around just capturing more of like their titanium card, their their IPO fund to get access to private companies. They just really understand their customer very well. For better or for worse, don't think that Coinbase has like really leveled up their product experience. They still have like mind share and brand and goodwill because they're synonymous with crypto in the US. But again, I in a world where the regulatory barrier degrades, it's it's probably more beneficial for the backpacks, the Krakens, the Asian exchanges that I think Binance just hired a new CEO in the US. So you're going to see a much more competitive landscape in
Who,
the
by the way, is
product.
a compliance guy.
No, but yeah, like I think it's product always wins, I think. And so I think from that basis, Robinhood and Kraken, I think, are doing more interesting things.
Yep.
Yeah.
Yep.
All right, man. Content of the week. What do you got for us?
Oscars on Sunday.
Are you hosting a party? Which, ladies
I'm
and
not
gentlemen,
hosting this year. I'm not hosting this year.
what?
Yeah,
You
I'm not
said you
hosting this
did
year.
it every year. What's going? Is this
Yeah,
truly down
this
bad?
will be the first year in like 5 years that we haven't hosted something. So, no, 6 years maybe, but it's
Okay.
been
I'm sure prediction markets are going to be all the rage. I talked to a guy that is building like a prediction market. He's a number one, like a parlay prediction, like parlay prediction markets. He's, I think, the number one on the leaderboard of the culture category in parlay market. And I asked him, like, how do you become, like, what's the edge? And he was just like, that is really complicated, but interesting way he sourced like just alpha for that. It was pretty fascinating.
I'm going to tell you uh, if I was a user of Polymarket International, I might have I might have seen that Timothy Chalamet was trading at 80% to win Best Actor like a month or two ago, and that movie was not very good. And maybe some people are going to tweet at me about that. And I did not think that he was going to win. And now the favorite is it's Michael B. Jordan, and so it would have more than doubled my money had I taken the no on Timothy Chalamet. So.
Rob, look, and I know you guys just raise a fund, but why not just? I also heard about these guys that are launching a fund to do prediction market ARV and stuff like that. Why not just in-source, run your own prop capital, and just become the number one leaderboard like trader in culture category?
I should have done that. Like, venture capital and a new side gig. I'm gonna trade just like Oscar season's my Super Bowl. I'm telling you
Yeah.
what, like if I was trading Oscar season, I would be, maybe I'd be making more money than just investing in Polymarket has made us. So
I'm just going to say it. Rob, the fact pattern remains. Rob moves back from Miami to New York, is not hosting an Oscar party, and has now 4 monitors in his home setup. You best believe what he's going to be doing this weekend.
telling you what, the voting it ended last Thursday.
Okay.
Like I'm starting to see some leaks come out. You gotta get into like deep into the forums, right?
Yeah.
There's pick up the phone, call the people you know in LA.
Actually, on this point, I asked him like when they were doing parlays, I'm like, how do you like mitigate like toxic flow and stuff like that? And he had a pretty compelling answer. He was like, look, there's something that we can do on our end, which if it's a trader that is putting similar sized bets across different markets, you're going to absorb that. Like it's reasonably assessed like low risk. But if it's a fresh wallet that just put a massive amount on like a certain um, directional bet on a particular event, like in case in the Oscars, right? If you see like fresh wallets just bet on like a number of things, it's like that's definitely an insider, right? And so you could decide not to, you could like not take that, right? And so it was just a pretty interesting discussion.
I mean, on this point, by the way, the CFTC put out basically this morning, and so Chairman Selig was on CNBC, and he put out a letter that was proposing new prediction market rulemaking process. So we're starting to see the CFTC think through how they want to provide kind of new and updated rules that are specifically be made for prediction markets. And so that was kind of the first step in the this process to do that. And then they'll put out an issuance of kind of a proposed rulemaking issuance and take some feedback on that. And so we should see more and more come out of the CFTC in the near term about how to think through regulating prediction markets. They very clearly want prediction markets to be able to fit under the CFTC guidance. They believe that is the mandate, and they want to make sure that they flourish and they thrive. But they obviously want to make sure that people's concerns are addressed and that there's real rulemaking out there. And so, that'll be something that we'll see evolve over time, which I think will be quite interesting for both Polymarket and Kalashi, who are very supportive of this.
Yeah. Okay, so the Oscars for you this week. For me, not much, to be honest. Like I've just been playing around with Claude, like primary research there. My consumption for content these days is very much like how Mark Andreessen tweeted about a couple days ago, which is like a lot of it is just like good blog posts. I do subscribe to Michael Burry's one, Cassandra Unchained. It's phenomenal. And it's pretty pricey. But I think he's making more money off of those subscriptions on Substack than what he was making as management fees if you're running a large fund. But really good content. I mean, he has one on Palantir, which is fascinating. I think I might have mentioned it before, but really, really good archive. It's well worth, and I'll drop my ref link below. No, I'm kidding. It's just a very good, I mean, he has just really good perspectives on markets and companies and stuff like that. So, one thing I was reading up yesterday was there's this massive acquisition. I think Google bought Wix for $32 billion, and I was just reading up on like the evolution of that business. Like just cracked 4-person team from the Israeli like IDF, second time founders. Just really, really interesting story. Like I always want to understand like what is the evolution of that business. And I think the guys were like based in Israel, so they were coding most of the day, and then throughout the night they were just hitting the phones and selling in a US like hours. Just built different. So anyways, that was a really interesting story that I was poking around last night.
Cool.
Yeah. All right, guys. Rob, is it going to be a category in prediction markets around which tokens are going to be transitioned into equity? If there's not, there probably should be one.
There should be. Yeah, there definitely should be.
And parlay there. Well, that would be nice.
No. As Kashi would call them, combos.
Combos. That's right. All right, gents. Well, and ladies and gentlemen, thanks for tuning in. Rob, welcome back to New York, I guess. So we'll see you guys
not next week, but week after. We're live at DAS.
Well, that's right. Yeah. I guess this is a time where Yano would have said, go get your tickets. We're sold out. We're about to get sold out, but we're all going to be there live. And so it should be a great time.
Yeah.
Okay.
Yeah.
All right, guys. Thanks for listening.